Good morning, everyone, and welcome to the second Central Bank of Ireland Financial System Conference. My name is Denise Delaney, and I'm Head of the Supervisory Risk and Horizontal Division at the Central Bank. Over the course of the day, we are very much looking forward to engaging with you, our audience, our speakers and our panellists on the current and future regulatory landscape for both consumers and firms. This conference brings together representatives from industry, civil society, consumer organisations, as well as policymakers from across Ireland, Europe and the US. We are delighted to welcome so many of you in the room today, and also so many of you viewing online. More than 700 people have registered to virtually attend this event. Throughout the day, we very much look forward to hearing from you. There will be many opportunities for everyone in this room and our virtual audience to take part in the discussion. Those of you joining us online can put forward your questions via the questions and answers box during each of the panel discussions. The title of our conference, Achieving Good Outcomes in an Uncertain World, reflects the current context, which is marked by two significant features. Firstly, that of radical uncertainty, with a range of unlikely outcomes crystallising sequentially. Citizens, businesses and public authorities are continuing to face the materialisation of significant challenges and risks. A second feature is the resilience of all of these actors and the determination to continue to strive to achieve progress and positive outcomes across the full range of socio-economic factors of well-being. There remain significant challenges ahead and real risks, but the focus remains on navigating these challenges and delivering for citizens and the economy. This uncertainty and challenge also occurs against a backdrop of accelerating technological change. Together with the pandemic, climate change and demographics, how people use and their expectations of financial services are transforming. For those working in and with the financial system, it is crucial that we continue to consider the future and our preparation for the changes that we know are on the horizon. This conference will create a space for this conversation at both a micro and macro level, ensuring the system is fit for the future. So with a packed agenda and lots to get through, let's get started with today's proceedings. It gives me great pleasure to introduce Central Bank of Ireland Governor Gabriel Makhlouf.
Thank you very much, Denise Fulcher. Good morning and welcome, whether you're in the room virtually or physically, to our second Financial System Conference. The conference is designed to bring together diverse perspectives from the Central Bank of Ireland's wide range of stakeholders, including industry leaders, consumer representatives and policymakers from Ireland, across the EU and indeed wider afield, to discuss and debate the forces shaping the financial system. And I'm looking forward to listening and learning from our excellent panels of speakers and a range of themes throughout the day. Now, the economy and financial system is still adjusting to the change in interest rates by central banks. Overall, although we have seen bouts of volatility and episodes of risk crystallization globally, that adjustment to date has been relatively orderly, and we are in fact seeing strength in risky asset markets. The domestic economy has continued to expand, albeit at a slower pace, as monetary policy is taking hold, domestically and globally. Early signals of the impact of inflation and monetary tightening on borrower resilience are becoming visible among tracker mortgages, personal loans, and certain corporate lending segments. We're seeing vulnerabilities in commercial real estate, but the labour market remains robust, and the broad macro picture shows there is resilience in the economy and financial system. Having said that, there is huge uncertainty as to what lies ahead. A large part of monetary tightening has yet to be passed through to the financial system and to the economy. And while some risks are fading, new risks are emerging. These issues and questions won't be the focus of my remarks today, but you can tune in to our financial stability review later this month to hear our thoughts on risks and resilience of the financial system and policies to address them. I'm delighted that Lisa Cook from the US Federal Reserve has flown in for the conference. Lisa worked on the Eurozone sovereign debt crisis when at the White House, and today will give us a wider view on challenges posed to the stability of the financial system. Rather, my main task this morning is to open the conference and introduce some of the key themes. Our financial system has changed significantly in recent years, bringing new entrants, new products, and new ways of serving consumers and the economy. This provides many opportunities, but if not adequately managed, it can also pose many risks. We have an excellent lineup of speakers today to discuss some of the issues that will be top of all of your minds, including uncertainty in the geo-economic environment, securing customers' interests, individual accountability, and EU financial regulation. The subtext of our themes for discussion today is how. How do we meet the challenge of uncertainty, be it from wars, pandemics, or inflation? How do we achieve positive outcomes through regulation, through our business, through our advocacy, in an ever-changing world? How will we make individual accountability work? How must financial regulation itself transform along with the financial system? Last year at this conference, I discussed our own regulatory approach here at the Central Bank of Ireland. I outlined the 6 principles regulation needed to follow to support positive outcomes and the welfare of the people as a whole. Regulation must be forward-looking, connected, proportionate, predictable, transparent, and agile. And in my remarks today, I'd like to outline how, over the last year, we've put those principles into practice. But to quickly recap on the principles. Forward-looking, because although we need to learn from history, we need to prioritize regulating for the future, especially as the pace of change means it quickly becomes the present. Connected, because in a European and global financial market, being more connected with market participants, whether firms, other regulators, consumers, and investors, is essential to better understand risk and to support agility and foresight in how we regulate. Proportionate, because we want regulation to address the harm or failure on which it is aimed without causing unintended consequences. If regulation goes further than required, it creates distortions that can contribute to suboptimal outcomes. So there needs to be an effective and disciplined consideration and weighing of the costs, benefits, and trade-offs involved in any regulatory intervention. Predictable, because consumers and firms need to understand what the central bank is trying to do and what it is we expect others to be doing. Our expectations of firms should be clear so that they can implement regulatory requirements in an orderly manner. And of course, it is important that investors and consumers have the basics of financial literacy. Transparent, because building trust in the financial system requires that market participants are able to see that regulators are doing their job and regulations are working as intended. And the phrase market participants includes firms, consumers, and investors, and last and very much not least, agile, because the financial system has shown us that it can change quickly, that it is changing quickly, and that it will continue to change quickly. And regulation needs to adapt to a changing risk environment at a similar pace. Now, every year, we work on a range of pieces of financial regulation with our domestic and European stakeholders. Throughout this year, key priorities for the bank have been consulting and engaging on regulatory developments under our consumer protection framework and individual accountability framework, and working on our approach to innovation. And I'm delighted today to launch our consultation on innovation engagement. As the financial landscape evolves, we acknowledge the need to evolve with it, including deepening our engagement with innovators and the wider innovation ecosystem. This allows us to better understand the opportunities and risks for consumers and the economy, so we can remain agile and forward-looking. We're doing this to better inform our regulatory approach and better explain to new firms what being regulated entails, so firms can build regulatory requirements and safeguards into their early stage development and embed a regulatory culture, enabling them to grow safely. In essence, so we can remain predictable, proportionate, and connected. Many of you have called for us to establish a sandbox. We've listened, and we will do this. Our sandbox will foster innovation in financial services so as to support better outcomes consistent with our public policy objectives. In line with our principle of transparency, we want your views on our plans, the themes we should focus on, and how we enhance our approach to innovation more generally. Just like we are aiming to ensure we remain forward-looking with our approach to innovation, we must also make sure our regulation remains forward-looking. The revised Consumer Code will be a modern, single set of go-to regulations for consumers and firms alike, reflecting the changes that are taking place in the financial system. A key aim of the code review is to bring coherence to these developments, delineate the resulting shape of the regulatory landscape, and looking forward, bring clear predictability and enhanced certainty to expectations on firms. A core theme that's emerged in our consultation so far is that digitalization will bring greater choice and access for consumers, but it also brings potential risks and challenges which need to be addressed. And as the financial system goes through a period of transition, we want to ensure that in their interactions with firms, consumers' best interests are secured. This theme and others have informed our thinking on the proposed changes to the Consumer Protection Code. Over the coming months, we will also be implementing the new Individual Accountability Framework, the IAF. I'm sure the panels will discuss the specifics of these in more detail, but if you indulge me for a moment, I want to again talk about the how. How are we approaching these pieces of regulation, and how do we plan to implement them? So we take an integrated perspective of these two significant areas of work. They complement each other, operate in tandem to advance the delivery of our mandate, and are founded in a single philosophy of high-quality regulation. A significant component of our intensive engagement with stakeholders on both bodies of work has been exchanges on the issue of impact, proportionality, and the delivery of positive overall outcomes. And we've been clear that the benefits it must bring must outweigh the costs. The regulation must be not only proportionate, but has to be applied proportionately. And it must be consistent with a financial services market functioning well on the basis of good competition and ongoing innovation. Sustainable profitability as a commercial objective is a key driver of a successfully functioning market, and our regulation must reflect the importance of this central component of our system. But commerciality cannot be a singular focus. We want firms to better integrate consumer protection considerations into their commercial decision-making. And it's in this context that we've developed our implementation plan for the IAF and our review of the code. And thank you to those of you who've provided feedback to our consultation. We've heard you. We will be publishing our feedback statement and guidance next week, so you'll have all the detail then. But let me take the opportunity of us all gathering together to outline some key aspects. On many core issues, our proposed approach received strong support from stakeholders. Respondents were broadly supportive of the IAF and its core objectives. The broad consensus was that the IAF will provide clarity of responsibilities, which will underpin sound governance across the financial sector, enhancing the culture of accountability in firms, and bring clarity to individuals in respect of the standards of conduct they are expected to meet. Some respondents highlighted a risk of a materially increased compliance burden resulting from the requirements of the new framework. And in both the IAF and the Code, our aim is to mature, improve, cohere, and clarify our regulatory framework. We have avoided the idea that these simply require firms to become more sound, to strengthen their governance, to put more consumer protections in place. We're aiming to avoid materially increasing compliance reporting, but we do want to better engender a good culture of compliance in firms. Many of the expectations already form an integral part of our existing supervisory approach today. Both areas of work have at their heart the imperative to deliver better outcomes in terms of resilience, governance, and consumer and investor outcomes, while at the same time improving the overall regulatory context for firms. The IAF is not and will not be a tick box exercise. Rather, it will support our supervision of firms, and it will be implemented in a way that will support high-quality leadership and governance of firms by bringing enhanced clarity to the governance of such firms, to the allocation of responsibilities, and to the expectations that apply to those running the firms. And importantly, it'll seek to do this in a flexible way, leveraging the governance and management structures adopted by the individual firms and in a manner that has proportionality, predictability, and reasonable expectations embedded at every point. Many of you were concerned about the timing for implementation. The conduct standards are set out in legislation, and regulations prescribing responsibilities of certain roles will apply to in-scope firms from the 1st of July next year. We think this reflects a good balance between maintaining momentum on the longer-awaited framework and providing sufficient time for implementation. A frequently raised comment in the consultation was that the number and scope of prescribed responsibilities was significant, and to address this point, we have reviewed and reduced the number while maintaining overall coherence. We've also decided to defer the application to INEDs and non-executive directors by 1 year to enable both the central bank and regulated firms to learn from the introduction of the new framework to executives in the first instance, as well as how we will use the framework to inform our supervision. In particular, a 12-month learning period should enable firms to better manage the issues some have identified in reconciling the collective responsibility of boards with the new individual accountability regime. We will remain forward-looking, connected, proportionate, predictable, transparent, and agile in its implementation and supervision. Now, international influence and cooperation is critical for delivering the bank's mandate in an increasingly complex, challenging, and uncertain environment. Heightened geopolitical tensions, the war in Ukraine, and tighter monetary policy following a long period of low interest rates are contributing to the complexity and uncertainty for policymakers. And as a small, open economy, we need to be particularly alive to those tensions, to fragmentation, and in the case of the EU, the implications of open strategic autonomy. These shifting forces have implications for existing relationships and building strategic alliances looking ahead. The evolving relationship with the United Kingdom post its withdrawal from the EU may raise issues between the UK and the EU. The Central Bank of Ireland has always had an excellent relationship with the Bank of England and our other counterpart authorities. Throughout all the political tensions of the last few years, our close and cooperative relationship has only grown, and we're honoured that Andrew Bailey is here to give us a keynote address. With a large international financial sector, it is imperative Ireland has a credible and influential voice at European and global policy tables. We may be a small, open economy, but we are home to a large and globally connected financial centre. And achieving our mission and fulfilling our statutory responsibilities requires us to work with and engage at European and international level across all areas of our mandate. We're constantly prioritising and articulating our policy positions in international fora. And this year, our priorities at the EU level include the new regulations on digital operational resilience and crypto markets, contributing to progressing the review of the Payment Services Directive and the functioning of open banking. The next EU Commission's priorities, the one that will come in place next year, their priorities for the policy pipeline for the medium term will influence our work, as will indeed it'll influence the Irish presidency in 2026. We will all need to be flexible to achieve our strategic objectives. So in this context, I'm delighted that the person at the very core of EU financial services regulation, Sean Berrigan from the European Commission, is with us here today. So let me conclude, and let me reiterate just a few thoughts. We live in uncertain times, but we cannot wait for certainty to act. How we react to events, to risks, or to change matters. Building trust in the financial system requires that firms, consumers and investors see that we are all doing our job and that the system is working as intended. The pace of change means it quickly becomes the presence, so we will need to adapt at a similar pace. And being more connected is essential for us all to better understand risk and to support agility and foresight in all of our work. So I think the principles of being forward-looking, agile and connected, transparent, proportionate and predictable have applicability beyond regulation making. And I'm looking forward to us exploring these issues further today. So thank you very much for joining us. And it gives me great pleasure to welcome and introduce a friend and colleague, Governor of the Bank of England, Andrew Bailey.